Hey guys, it is Tuesday, November the 8th, election day. Make sure to vote if you are a citizen of the US. If you're watching this from somewhere else, cool. Let's see how it goes. This market is really something special. It's really interesting to see the rally that is happening right now because in a lot of ways, I'm like, it's so severe and fierce and it's in names where they don't really have any business rallying that I'm kind of like, interesting. So I can only imagine that this is mostly the elections and the idea that we're going to rally post midterms than it is anything else. There really is, look, most of the companies, 60%, which is actually more than last quarter that I've been listening to, have come in better than expected. Now I'm only through about 230 companies out of the 500 in the S&P. As you guys know, I listen to about, let me increase the size of this. I listen to about 400 every quarter, every single quarter. And so these are companies, for me, when I say they came in well, I'm saying that top line growth, revenue growth is there, and they are bringing it through to operating income. Also EPS, okay? But I look through the entire thing because I will remove any below the line charges that fair and square are a little bit silly, such as check out my episode with Etsy. That kind of charge where I think she's literally doing it for tax purposes is fine by me. I'll consider it a win because it comes out of cash flow anyways. All right, let's actually go through today Tesla and also Mosaic, two companies that I think really demonstrate how bad business news has gotten at this point. It's so reactive and there's like almost no research or consideration done for it. It's part of the reason why I'm doing this channel because I just can't tolerate it anymore, to be honest. So let's get into that. But I do want to also just show you the indices and set it up for today. Past performance, it's not indicative of future returns. Oil down a touch today, stupid, with all due respect. And then the indices doing what they're doing. FinViz really demonstrates to you how broad-based this rally is. It's like an election rally, for lack of a better way to describe it. Because even though I'm telling you corporate America is doing well, it's not doing as well. You know what I'm saying? Let's call it what it is. All right. This week, we do still have... So Disney reports tomorrow. Sorry, not going to report on that, but I'm sure they'll do fine. And I think they'll probably do fine because of the parks business, to be fair. But election day, CPI tomorrow morning, bright and early, is going to be scary for some people. So we'll have to watch that carefully. And then, we've got really, it slows down aggressively. Like a lot of these guys are reporting after the close. Mosaic reported and had its call at 11 o'clock. The street doesn't want to give them credit. I think that's dumb. And then we're going to talk about Tesla. The first thing I want to address with Tesla is this. There's also some kind of lawsuit that an investor's doing about whether or not he deserves his compensation package. I've killed my tongue on almost all these issues because these are not necessarily new issues. Let's just talk about that for a second. Okay, SEC filing 2020, the 10KA, all right? You guys can read this. What was his compensation before he hit his tranches? $0. So seriously, get over yourself. If you failed to put a compensation package that was the correct compensation package, and now he's at the end of his 12th tranche, then, I get that you might sue him because you need him to come back to the table on compensation. But the news media has to figure out a different way to report that's a little bit more thoughtful. I want to show you this because actually teslarati.com, after I read the documents, I was like, oh my gosh, how am I going to present this? This website, teslarati.com, I've ended up on more than once. They do an excellent job with doing research on specifically Tesla. And let's just be clear, I am not an Elon fervent follower. I'm not part of the cheerleaders for Elon at all, but I just can't stand it when news is reported in a way that is so massively, stupidly biased that you act like it shouldn't. There's no place for that in business news. Go report on the royal family, in my opinion, if that's what you want to do. Don't report on business. It's not helpful. But this is actually a great slide straight off their website. Hopefully they won't get mad at me, but I'm one lady trying to report, so it is what it is. These are the 12 tranches and what was expected for him to vest as options. He's actually already made the last one. One of the biggest, except, one of the last ones that was a milestone was the market cap requirement, which he like slid into. And then this EBITDA one, the last quarter would have put him just under the 175 billion. This was established in 2018. He has 10 years to do it. So they're early in actually achieving every milestone. So pretending like he's not got his eye on the ball, Twitter's going to take his eye off the ball, la, la, la. He has other companies as well, and he's doing just fine. Get over it, in my opinion. Now, if this lawsuit, which we will never know until we know, if this lawsuit is just to bring him back to the compensation table to realign with investors, given that he's already hit his 10-year target, like not even really 5 years in, I'm cool, but let's not report it like he's doing something messed up with Twitter. Okay. Can we just be honest as folks that like follow the business news? All right. Next little thing. Oh yeah, this is the EBITDA. And I really want to show you, this is just total revenue, but what they don't show in here, I pulled the wrong part of that presentation, which is public. You just get it straight from the website, is that not just autos revenue, but also the battery business is doing well. Now let's talk about China, because there's all kinds of crazy headlines on China. And then when you read the article, it's much more muted, but still there's not a lot of fact. For all due respect, Business Insider this time, what were you thinking in the article? And it's driving me actually crazy, okay? So here's the sales in China that actually is the total sales. So it's about a little bit more than 10% of total, a little bit less than 10% of total, right? You can see that very clearly. It's remained that way, what have you. And they reported it like, oh my God, the Chinese subsidy, la, la, la. Okay, the Chinese subsidy is because he reduced the price of the car and then took off this insurance subsidy that he gave people. And then because he's worried about how the demand will go in the future, he just put it back on. Okay. So that's actually what's going on here. Because I looked everywhere, I was like, is this truly new? They did announce it today. So maybe there'll be some articles out, but this is the exact thing that's actually going on. So Business Insider got this part right, but they reported it in this way that is kind of silly. And I'll tell you why it's silly. It's silly because the market in China for EV is actually growing. So even though Tesla, relative to some of the other auto companies, is not as competitive, fair point, get it, totally. There are people that in China that 100%, because of how easy it is for a number of things. Number one, purchase price. Number two, if your car breaks down, it's easier to get it fixed. All that stuff is true, okay? But I really want to remind you guys, of this slide that is in every single presentation deck, every single time they produce it, okay? Yes, 750,000 plus is where they're trying to go in the Shanghai facility. But let's read this very carefully together. Our factory in Shanghai remains our main export hub, supplying vehicles to most of the markets outside North America. Now, is there a place where you might want to export given the fact that your operational costs are going up due to an energy crisis? How about this one right here, Berlin? Okay. So it's just like, what are you doing? We're like literally 1 month into the quarter. So we can pretend like all this stuff is like totally bad for Tesla, or we can like talk about the fact that we don't know and just leave it at that. Okay. So that's what I have to say about the most recent headlines that I think are just completely unfair. It's too early to make a call. And then you're like really literally creating news is what you're doing in this area. Okay. Because like you're creating news. These headlines are a joke. Let's keep going. Twitter. I'm so tired of Twitter because everyone paints Elon like he's the bad guy because he's coming in like a corporate raider. First of all, he's coming in like a corporate activist. For those of you that don't know what the poison pill is, which was initiated by the board of Twitter, which Elon's right in his tweets. They didn't own shares. Like Elon, if you look at his ownership of Tesla, he owns a slug of Tesla. This management team, the board, they didn't own a lot of Tesla, okay? So the poison pill is supposed to be to prevent, and they added this word, activist investors. It's actually corporate raiders. If you go back to the 80s and really read what was happening then, it wasn't activist investors that was your issue. It was corporate raiders. Very different. An activist investor comes in and says, hey, I think you're managing this company poorly, okay? A corporate raider comes in and breaks your company apart and has no interest in actually helping the company survive or otherwise. He's being painted like a corporate raider because he wants to fire 75% of the headcount. But let's take a look, because as an investor and what subsequently happened after his April offer, I'm actually really cool with the fact, and now that everybody's gone, I'm actually really cool with the fact that he wanted to fire 75% of you. Let's talk about why, okay? All right. This was the quarter, December 31st, before the offer was made, okay? You know, the CEO, newly appointed, he's supposed to do great things. This is what he did, okay? So we had revenue up 21%, costs up 34%. And the only reason this number looked okay, so net income 222,000. So net income down 18%, but it would have been down more if it wasn't for this line item right here, which is other income, selling off assets in order to pay this. Marketing up 50%, R&D up 50%. Now this is before everybody decided in this year that they were going to dump a bunch of money into R&D and marketing. And this predates some of the other issues that were at the first quarter of the year. Okay. So already this is what's going to happen. Now it's a turnaround and I'm kind of like, that's cool. COGS up 20%. So in line with revenue, SG&A up 55%. SG&A, this is salaries, my friends. Okay. That's what that is. And if we're confused, it shows on the cash flow statement. Okay. I listened to the quarter and I'm like, I don't know, I have mixed feelings about whether this strategy is going to work. Now, I'm not Elon with that massive brain, okay? But I'm like, I'm not sure. That's the fourth quarter, right? Now, let's look. So, like going in, we're all watching for the new CEO to announce a legit strategy that's going to take Twitter to the next level. And he comes from the operations side of the business. He does not come from the sales side of the business, that and the other. And so it was an interesting selection to begin with. I think it was actually controversial, but for whatever reason, the news forgets that in their desire to hate on Elon. So then the first quarter, it was kind of like a question mark in my mind, given how big the spend was and how little we were really hearing on what was actually going to happen. What was actually going to happen was subscriber growth, but I kind of need you to make money. I'm just saying, I'm an investor and your market cap is big enough where you ought to be making a lot of money and improving operating margins going in. So now let's look at what they actually announced on the next quarter, as Elon is absolutely taking a bigger share and just being like, I don't trust your strategy. All right. This is actually the April 28th earnings report just after the offer. Do we have higher revenue? Yeah, we do. But I want you to see these items. Okay. This item right here, again, you have this right here, the 970. So you have operating income. I can't believe I didn't make this easier on myself. So you have a loss. Income lost from operations. And the only reason this number is positive is the 970 million coming from Elon. Okay. Now let's talk about this loss. And the reason none of that would have made me upset. Okay. Because I get it. You have to deal with this corporate person. It is what it is. Okay. None of that would have made me accept it, except this is what happened on the cash flow statement. This stock-based compensation was an increase of 60%. So essentially, they enacted the poison pill, which diluted shareholders, and then they decided to award themselves 60% and force Elon to eat it, okay? So you know what? I don't feel anything, because if this deal had not gone through, you would have just diluted shareholders to a ridiculous number of value. And so the downside would have been we as shareholders would have been massively diluted. And by the way, did you make money on that quarter? No, you did not. And also, it became clear that your strategy wasn't going to work going into the year. So you would have diluted us. If the deal hadn't gone through, we would have been sitting there with a big ass bag. Let's call it what it is. So you know what? I'm glad you're gone, with all due respect. That is what I feel like is not being reported. It's such a joke. Sorry, here it is. This is Twitter. You increased R&D again, your sales number, you didn't even try, and your COGS went up 33% despite the 15% revenue increase. That's why I'm saying Elon was right. You weren't going to turn this company around. So that is what I have to say on Twitter. Please, guys, stop it already. You know? All right. Let's see if there's anything else. Oh yeah. Okay. So now let's talk about Mosaic. All my passion is out, but I'm just, you know, it is what it is. Okay. Mosaic is kind of, it's, you know, look, I recommended this last year when it was at 36, and I have been really sad that it's basically stopped and parked itself at the $50 range. I really have been. And I do think that there's a lot of unfairness going on, because technically, what's been going on with Mosaic is that because it hasn't moved very much, and because if you look at just the raw number for what's going on in fertilizer, it's been dancing around an elevated level from last year, but it hasn't been continuing to increase. And this is not so different from oil and gas in the sense that, like, the fertilizer price can stay wherever it is, but it's elevated. And the company, because of the nature of how much they've done in cost savings, can continue to mint and print money. So I'm going to show you how Mosaic has become a printing press for money. Okay. Because I just think, like, it's so unfair with some of these companies. You know, these are blue collar companies that create jobs for blue collar workers. Why they're getting attacked so aggressively, I have no idea. Here's the sales number, up 56%. Operating income, so it's coming straight down, up 64%, EPS up 123%. And they did get a lot of questions on, why do you feel like that the number can come straight to operating income and then subsequently on EPS? And he answered that, and I will go through it in just a bit. Actually, I'll go through it now. Now, I really want to highlight this down here. You see the share count, okay? 383 million last year, 347 million this year. He's bought back over 10% of the shares outstanding. That more than compensates for the secondary offering that first took it down to the 30s from Vale, who essentially wanted the capital back so they could reinvest it in other things. They're more of a nickel producer, if we're really honest. They do a bunch of other mining operations down in Brazil, so I don't want to be on record for saying that's the only thing they do. But that's what, like, that whole last year secondary $1 billion offering, that's already passed. Okay, now I want to show you very clearly, before I address the other issue that's out there on these guys. Let's look at the cash flow statement. Because of the way they do their, the way that they bake in depreciation, it shows more cleanly on the income statement. But as a result, this becomes cash flow from operations, despite the fact they have DNA for every single product line. It doesn't show here, but this is very clean because of the way they do it. It's a doubling of operating cash flow. Cash flow from investing, there's not a bunch of CapEx that's going on. This is more or less flat year over year. And that's despite the increase in price. And the reason it's flat is because they're not going to flood the market. And also, it wouldn't make sense to flood the market given the environment that they're experiencing on the cost side, and also regulations, all that stuff. I'm just going to keep it simple like that. There is actually a lot more to that statement. So just for the interest of time. But here's the thing on the financing side, crystal squeaky clean. Okay, you can look at those because maybe you think that those big numbers are it, but it's really not. That's like proceeds from short-term debt versus payments to inventory financing, which they're now paying it off. And then proceeds from inventory. Yeah, so you're not getting any kind of weird financing there. You're not getting any kind of weird accounts payable. That's all straight. They're actually paying everyone quickly, like a normal company does when it's doing well. And then this one right here should have been this. Repurchase of the stock, $600 million. They're totally allowed, like their buyback is in the billions. So they actually still can keep doing this. And they've already bought back in the last, this is 9 months, $1.6 billion worth of stock, which more than covers the billion that Vale punted into the marketplace last year. Okay, now let's talk about long-term debt, 16 versus 466. That goes back to the thing that I showed, I think, in the Equinix episode that I did just a few days ago. There's no reason to refinance debt into a rising interest rate environment if you're printing money, okay? So that's what it's gonna look like in case you guys are still becoming at one with the cash flow statement. So there is nothing wrong with this company whatsoever. Some people push them. These are basically their gross margins. So you can see adjusted gross margin. You have to compare it to last year to take the seasonality out, but you can see that the potash business that everybody's been so concerned about is actually printing money. Phosphate is more or less, it's slightly up from last year. And the fertilizers business, which is their Brazil business for fertilizer, has more capacity come on. Yes. Are they running that business correctly? Yeah, they are. Look at this. This is beautiful. Okay. And then they also give you the breakout. They give you breakout bridges so you can look at it from an EBITDA basis. Potash is legit making money. Okay. They did actually increase the volume on it. What you have to know there is that we are absolutely, one of the inputs to potash is, I believe it's nitrogen. Anyways, potash, they produce it. They have a benefit. The way that they do it is going to give them some sort of benefit relative to competitors. And so it shows. I don't know another way to say it. Okay. Phosphate, this one's kind of important, okay? Because they really got pushed on phosphate. And this is what happened with phosphate. EBITDA was only up a very small amount. They had much lower volumes. And they're like, yo, guys, what's going on in phosphate? Can you help us out? Because we don't understand why this happened. And they're like, look, there was a hurricane in Florida, right? Which is where we make the phosphate. And then everybody's like, well, be honest, is it China? Is China like dumping phosphate on? Because China hasn't been exporting this. And he's like, oh, yeah, good question. Thank you for asking it. Because sometimes the investors do ask to prompt the management team to say some stuff. And I feel bad that I forgot this as well. You know, the reason that China isn't exporting its phosphate has to do with two things. Number one, they are actually trying to improve their environmental footprint, which is the same reason why Mosaic doesn't go out of control and produce crazy volumes. So phosphate mining does have some negative elements to it, et cetera. So China, actually, that's one of the reasons that was given. It's probably not the most important reason, quite frankly. Let's call it what it is. It's still China. I love you guys, but I'll be honest. But the other thing that I think people often forget about phosphate, self-included, is that it's the other element you need for lithium batteries. So apparently they said, look, it really looks to me like they're not going to export the phosphate because as much as we're into batteries and the EV world of what's going on, China is way ahead of us in both their way of their production innovation, because there's, I mean, batteries is an old technology, but in the innovation that they have to manufacture them affordably, but also how they're doing it to kind of sustain their energy situation. So that's why they're not exporting the phosphate. I always thought it had to do with feeding their population, which is kind of apparently secondary in this market for what's going on in China. Now, if you're confused as to what's going on in batteries, I'm just going to highlight that we did have an episode last week on Albemarle, which is now up 10% from what we said. The market did not at first react to Albemarle's crazy positive earnings, which we still will be holding it for a while, but up 10%, I kind of get it if you want to take a little profit and then come back to it. But the fact is, there is nothing that's going to help out the battery business and actually getting some kind of relief given what can actually be physically created in the next year and what the demand looks like at this point. So realize that, but this also is driving phosphate prices to do a particular set of activities. The fertilizer business still making money. Fertilizantes is actually their Brazilian business. There are other producers coming on, but these guys are old guys, okay? Like this is not a young man's business, the fertilizer business. So you can see that they already took down production to maintain profitability on EBITDA. And yet somehow, because of what's going on in the dynamic as relates to food, they're still going to make money. They're still going to show revenue growth off this business. And the last slide I have, sorry, this is a little bit more of an intense, because I'm like really upset without these, but this is the last thing in the press release. Yeah, so it's 5 million tons versus, so it's a reduction of 5 million tons that China's going to put out. Oh, I feel so bad. They had this one, there was one other thing in Mosaic. They were talking about what they were experiencing and what they thought was going to happen. Let me see if I pulled it out. In the food market in general. Oh, I didn't put it on here. But if you go through the press release, you'll see that they are absolutely still seeing tightness, both from the fact that we went into the Ukraine situation with very all-time lows of grain storage. And as much as everyone likes to pretend like a lot was pulled out of the Ukraine during the recent conflict, That's just not true, for lack of a better way to describe it. Plus, there are, yes, it's true that that number was pulled out, but no, it is not true that we have re-upped magically and that the Ukraine area actually produced something that it did not, and that all the other locations produced enough grain to make any kind of progress on that shortage that we went into this situation with. And so with that, I will stop the share and we can take questions. Sorry, I'm so fired up today, David. I don't know what happened this morning.
Oh, of course. Can you go back to that Twitter income statement?
Yeah, sure. What are you thinking?
You're saying that the executives diluted the stock and paid themselves more.
Here's the thing. If it wasn't for the offer outstanding, then this 100% would have been a massive increase in compensation via stock. So let me show it to you really clearly, because it was like, it's like in the release from April, So here it is, increased stock by 60%, stock-based compensation increased by 60%. You can't tell me that you had objectives that would justify that 60%. I know who that went to. Let's not lie, okay? Let's not pretend. 60% of stock. Like, we know who that went to. It's your departing management team, okay? So yeah, you were going to take all the upside if the deal goes through, and we were going to get diluted like crazy as the shareholder if the deal didn't go through. And then also, by the way, just in case we're confused, did they actually compensate themselves a lot? This G&A, actually, if you look at the cash flow statement from the December quarter, there was also a huge uptick in stock-based compensation as well. Now that one, I'm cool to give a pass to because he was newly appointed. And so maybe he was hiring new headcount. So you had kind of some stuff going on. But the second one, I don't give you a hall pass for that. Come on. You know what I mean?
Right, right. And you're saying that they counted what, his purchase as income?
Sorry, say that again.
They counted his purchase as income?
How do you mean? So basically they get compensated a bunch of options.
I understand. I'm talking about his, maybe he made a down payment. I don't know. You're showing something as
I couldn't
income.
find anywhere in the release a clear vision of what this number was. So maybe I am wrong, but I'm pretty sure, given all the things that I read, that I don't know what else this $900 million, almost $1 billion could have been, this 970. There wasn't anything that they were announcing. There weren't any acquisitions or deals. There weren't any sales of anything that I could find. So the only thing I could say that this is gain on sale of asset group. That's the only thing I could ever figure out what that 970 is. If somebody else knows, by the way, and is watching this after the fact, just stick it in the comments. I'm totally cool to like eat crow on it if I'm wrong, and that's not the money that was put down on the deal. But yeah, if you remove that, you can see very clearly income before income taxes is 828 minus 970. That's an L. Like,
and how did they classify gain on what?
Gain on sale of group assets. So you compensated yourself 60%, where you take all the upside, and I, the shareholder, if the deal gets through, don't take any upside. And I also, by the way, take an L on the quarter.
Wow. Okay. Thank you.
Right? That's what I just couldn't take it anymore. I'm like looking at all these articles last week about all the press coming out against Elon. And I'm just like, hold on a second. Was this the best deal that Elon could have done? No. Okay. But was it a reasonable deal at the time he made the offer? It wasn't that bad. I have an episode on that. He gave a premium to a company he wanted. The real thing that I think Elon needs to learn from this whole situation is maybe use a different set of words when you want to do this, because he did come out kind of nasty to the newly appointed CEO. I get why he did it, because like the quarter before, I was kind of like, ooh, I don't actually think that's going to actually turn this company around, but I probably would have said it more gently. But then what happened subsequently, none of it was for the shareholder. You know what I mean? So all that happened after he announced the deal was proof that this management team could care less about us. You know what I mean?
Yeah. Yeah. That's a good point. We'll post that for everybody to see.
It's so, and I'm totally not, I'm not an Elon groupie. I'm just not, right? Like if he F's up in a quarter, I will take him and like take him to the coals, just like everyone else I do on Markets with May, right? I'll be like, wow, that was bad. But he doesn't deserve it, because Tesla's actually it's actually the only company right now that's a mega cap that trades below its peg. Okay. NVIDIA, you would think would, but they had a really rough quarter this last quarter. But pretty much everybody else, because of what the growth rates are relative to their PE, add back, there's no debt at any of these companies. So let's just use the PEG. Okay. He's the only one that trades at such a severe discount to his PEG right now. Yes, there's a lot of news flow. I mean, even this morning you were telling me that because of Binance, the thing's getting jostled around. I get it. It's fine. So I will rake Elon through the coals one day, but he does not deserve this fake news reporting that's happening right now. I just think it's so messed up. You know what I mean?
Yeah, of course. Okay. Thank you, May.
All right, super cool. Good luck out there. And everybody, like, fingers crossed for this election, but take care. Bye, guys.